Hello and welcome to another update video about SUI. Yeah, on the SUI chart, what we're dealing with here is now a boring phase. Okay, so we are entering the first decent pullback here in this move to the upside, but we haven't really broken any key levels. Okay, so we haven't really moved any further since yesterday. Nothing that is in any way groundbreaking. But obviously the structure is sort of getting now a little bit messy here with this fourth wave that's likely unfolding. Let me take you through that. So first of all, I think there is no sign at this stage that a substantial top has formed. Not yet, okay? And the support areas, however, they should cover even that scenario. But if we break below support and the main support area ends at $1.20, well, that is when I have to confirm. It's not certainty, right? It's confirmation. Confirmation is never certainty. That's when we have to confirm that the red scenario has topped, which is the more bearish one. A few days ago, I showed you all scenarios here on the chart. But yeah, it is possible, not expected though, but it is possible that this move to the upside, which started in August, is just a simple ABC structure. Even in this C wave, we could get another high, but the higher we go now, the more probable the yellow count. The yellow count is already preferred. I think I'm quite clear about that. But yellow count probability will reduce with a break below $1.40 and further with a break below $1.20. Okay, so this is what I'm watching at the moment, these two key levels here. And this ABC structure, yeah, as I said, you know, it might have topped already, but that is not expected at the moment. It is a reasonable alternative. It's worth having a bearish alternative always, because we need to know when the bullish thesis likely breaks. But for now, focus is on higher prices. And when we zoom out, just wanted to, before we zoom in further, just to let you know again that this $2.47 target is still the first ideal target for circle 3 in yellow. It is at $2.47. Can go higher, the third wave, absolutely. But this would be the first ideal target, okay? And that's still, because it's based on just general Fibonacci extension guidelines for a third wave, that is what I would expect the third wave to do, or higher, as long as, and there's always an if-then relationship, the $1.40 level is holding, because that's the immediate support. Okay, below that level, we have a bit of a buffer zone down to 120, but below that level, it's just getting too protracted. And yeah, so that's key, to understand. The risk levels are absolute key in the very short term. I think we're just caught in the messiness of a fourth wave still. There is no evidence that wave 5 to the upside has started yet. Yesterday, I gave you a resistance area between 180 and 172. The price reacted to it, but it's not an impulsive reaction to the downside, so we might stretch a little bit higher, but it could just form a larger, I don't know, messy ABC structure. Could be that this B wave sits here. So essentially, the support area is really what matters, okay? It might take a while until we can really confirm that the fourth wave internally here, this micro fourth wave, is actually complete, because the next wave up is wave 5 of circle 3. A wave 5 can be an ending diagonal, so we might only be dealing with corrective structures, like could be ABC in 1 of 5. This could be wave 2 of 5. We might get an ABC in wave 3 of 5, wave 4, and then another ABC in wave 5 of 5. That's possible. But how can I confirm that? I can only tell you that as long as this last swing low is holding from Thursday around 160, 161, the focus could be on higher, but it's not high probability. So I will expect this correction to continue until I see an upside breakout. First of all, a sustained break above the Friday high at 182, followed by a break above $2. That's required, okay? So that's how I see at the moment the SUI chart. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.